Well, good morning, Ledges, and what a morning it is. Obviously, I'm sure you've all noticed the rather significant gap down that we've had in cable to the tune of 176 pips. It's pretty nasty and was due to May's comments regarding Brexit over the weekend. Now, it's difficult down here because you've really got nothing other than Wednesday's low to lean on. I know if you look on the daily chart, you'll see this spike low here, but I'm not using that as a point of reference for the simple reason that was the day of the flash crash, and I don't think you can rely on that as an exact low price. You'll be hard pressed to find two people that will be able to agree on what the price of the low was on that day. It varies massively across brokers. So as a result, I'm not attaching a whole lot of importance to that. Now, having said that, there is one of my favourite plays here, which is the fact that we gap down and we swing failed at Wednesday's low, which is a deep swing. And a gap with a swing failure is very high probability. So from that perspective alone, it does favour some upside. My concern is it's excessively volatile. You can see even on this spike here on news that May's comments were just speculation. The market undid that very, very quickly, and to trade this you would need a pretty wide stop. I think there's a better play in Euro GBP, and it looks like I've missed it, but I was looking for a gap and pop on the open into this area here on the daily chart, which is a really formidable area of prior lows. And if we come and look at that on the hourly, the exact point that I was looking to sell was the last low pre-breakdown. So I was offered here last night, and that is 88.81, and I was running a stop above the thrust candle at 89.04 plus spread. I did say as well in last night's webinar that the low end of the range was starting here at 88.56, and we'd want to watch the price action around there because it's possible that the Euro GBP could turn there. What you can see is we didn't even tag that, but we have certainly put in a swing failure with bearish engulfing on this candle here. Now, I think this is a difficult play, and I think it's a difficult play from a psychological perspective, because if you come in and short it on the close of the bearish engulfing, where are you going to put your stop? You're going to want to put your stop just above the high, and therefore you're going to be puking right into the area where you're originally anticipating it's going to roll over. And what's more, you could find yourself puking it up there, and then you get the second drive to a high that fails, and you have a distribution pattern. And I don't like puking when there's a possibility that I'm going to want to get right back in the trade. That's just me. So it makes that a really difficult setup for me. And as a result, I'm not going to take it. I will keep my offer in at 88.81, and we'll see if we get there. But otherwise, I won't be trading. Pull back to this little interim low, which is of course the close of the bearish engulfing. Another pair that I'm looking at is the New Zealand dollar. Now, the New Zealand dollar on the daily time frame at the moment is a long way towards showing a complete inside day reversal. You can see that we've broken the highs of this inside day on Friday overnight. We're now making our way towards the lows. It's looking very bearish coming into this morning. It's interesting because I was looking at this area to sell, which would have been quite a nice little area. I was looking at it because we were past ATR on the day, and I could also see this area of prior lows, and as is my way, I was going to go offered here at the last low pre-breakdown with a stop above this thrust, which would have made for a super tight stop, and allowed me to look for a potential reversal back to these highs here. It doesn't look like we're going to get that. Obviously I will keep that order in for a while, but at the moment with us heading away, it doesn't look like it's on the cards. Dollar Canadian, I've got some interest in, primarily because on the daily chart we had this candle here, which of course is a hammer, and it's a swing failure of this low here, making it quite a decent cross candle. The only issue that I have with this is that it is coming after a close through this ascending trend line, and actually Friday's high was pretty much the back of the trend line, and this is a very significant trend line to me. So I think you can't come in as bullish until we get back above that trend line. If we do get back above that trend line, then I will presume that the shorts are going to be squeezed, and I'll come in and try and be a buyer off these highs. So I'll be looking for something like this, a break up through here, making sure of course we clear this level here because there's all these lows and it's quite an important area, then buy the dip into this area and look for follow through with a decent target because of the daily bias of probably this last swing point here at 32.93 area. But again, it's going to have to make that move before I'm interested in it. Gold looks like I've missed this. I was talking in last night's webinar about trading a potential swing failure of this high, which has occurred here. Again, this occurred very early this morning when I was fast asleep, 6 a.m. But I liked that area because, again, if you look at it on the daily, it is the 38% fib that we tagged on Friday. It is this massive area of lows, and it's a really nice area to look for price action. You know, I'm sure some people will have got short of the 1206s. I mean, that was the original trade I was looking at. They're looking for a runner. Again, what happens? The market comes all the way back, forces many of the longer term players out for a scratch, and then we could potentially get quite a nice reversal. When it's moved away like this, the question that I often get is, well, why don't you just put a limit order to sell now back in here? My issue is if it gets up there now, I wouldn't really want it. After a swing failure like that, I'd be looking for a straight line move, and I would already be thinking about getting my stop down if I was short this, because the danger is you've got a weekly level here that we've got in red, and you don't want to start coming in and selling up into these highs when we're bouncing off of a weekly. So for me now, as I say, gold is not really something I want to be involved in, but I'll just note that I had that set up and at the moment I've missed it. And incidentally, that weekly level is drawn based on this big deep swing low in the middle of the range at 1199.8, so it's actually slightly higher than this, like there, if you want to be precise. Those are the major things that I'm looking at. Obviously there's a lot of markets there that I haven't covered. That's because I don't consider there to be imminent setups on them, so I'll leave it there, and then obviously we'll reconvene tomorrow for Tuesday's trades.